Good morning, Paul Georgie from Allendale. I'm covering for Steve this morning. He's on assignment with Orion Samuelson today. So we've got some very quiet news market today as far as the grain markets go. We did have the weekly export numbers came out at 7:30 this morning. They were on the high end of trade expectations. Corn 659. They were expecting between 400 and 650. The bean number was a very aggressive number, what was thought here early before the report, and we came out right up near the high end of that report at 1.13 million tons of beans sold last week. Wheat, 290, which was in the middle of the trade, and that's actually a pretty good number when we're looking at the world wheat supply and prices at different countries. France this morning is at the widest spread between the French wheat and U.S. wheat, $21 a ton cheaper for French wheat than U.S. wheat here this morning. So the world buyer is probably going to migrate that way rather than coming to the U.S. Outside markets are also having an impact on grain prices and overall agricultural prices here today. They're actually quiet this morning. The dollar is stable. The equity markets, the stock indices, they have firmed up a little bit on some short covering after that late break in the stock market yesterday. So giving a little bit of support coming out of those, the outside markets here today. Some of the news item that's being talked about is China's import data, where it shows that they imported 18% more soybeans during the first quarter of the marketing year than a year ago. And the USDA is only looking for a minimal adjustment there of 2 to 3% higher. So looking for that to continue to be supportive for the soybeans. We got NOPA crush data coming out tomorrow. Trade's looking for 157.8 million bushel versus 165.4 million bushel a year ago. So crush numbers are slowing down basically because of profit margins and demand. Soy oil stocks are expected to show a rise next week or on this report tomorrow. So that will have some impact and possibly some supportive factors for the soybean market going into that report. Wheat acreage's numbers have been worked through and processed, and bottom line is this big drop in wheat planted acres that we've seen on the January report. Historically, by the time we get to the June report, the final number, it actually the wheat acres show an increase. So we'll have to see if that happens or not. Farmer selling here in the U.S. continues to be extremely slow. Lower prices, definitely fighting any farmer selling at this point in time. Basis, however, has improved in Argentina and Brazil. The rise in the real and the peso has slowed farmer selling there, increasing basis, and may give us some support here in the corn market. Weather in South America certainly ideal in most cases. They've got moisture where they needed it. Temperatures aren't going to be as hot as what they thought, so we're not getting any support out of the weather situation in Brazil at this point in time. In the livestock trade, we had cash cattle trade this week up $1 to $2 from last week. Certainly a positive there. The beef cutout values is an item that the trade has been talking about for the last week and to 10 days here, that it's too high, it's going to correct. But yet yesterday we seen firmer cutout values again, and it seems that it should correct here after a $40-some increase in value, but not seeing that weakness as of yet. Demand seems to be fairly good. Pork cutout basically stable there. The trade, the meat supplies continue to be heavy, and we've got to work through that. But in the pork complex, we are seeing lighter and should see lighter slaughters as we go forward into late January, February, which could provide some support for that February contract. In the futures, we've got support in the cattle at around 131 in the February contract, resistance at 133.50 in the hogs. A broader range there. They're in an uptrending channel, but they've got resistance at around the 62.5 area in Feb, and support at $59 in the February contract. So we're looking for some more choppiness in the livestock. They're going to take their lead from the outside markets. If the stock market moves one way or the other, we expect that we'll see that kind of a move in the cattle complex. Spreading has been a big deal. The Goldman roll is the final day today where they're rolling out of the February into a deferred contract, and that move will be done today, so it'll get back to a more normal trading there with between the spreads. So be watching that as we go through today's close. If you got any questions, don't hesitate to call. And I want to remind you, sign up for the Allendale conference coming up here on the 26th, 27th of January, and 28th. We got Drew Lerner. That will be a live broadcast only, so you need to be in attendance on that day. And I know he's got some interesting outlooks here for the summer weather. So sign up for that. If you got any questions, call us at 800-262-7538. Thank you. Have a great trading day.